So markets trade pretty much flat today, and we have a series of reports that are set to be released tomorrow. What's going on, guys? It's Ricky with Tech Solutions here with a super quick update. So it looks like after the big beautiful bill, finally passed the House. Now it's not officially signed, it's not officially pushed through, but it's one step closer. In our previous video today, we quickly talked about some of the key factors. Also, if you're part of my LPP team, I sent out an email today highlighting some of the key points and also some concerns that some individuals have, right? The biggest thing when it comes down to concern for the overall economy, I'm focused not on politics, but just on the stock market is this big beautiful bill is supposed to add about $4 trillion onto our deficit. Our deficit is nearly at 37 trillion. It adds an additional $4 to $5 trillion within the next 5 to 10 years. And even Republicans that were part of the House were not a big fan of that. That's originally why it got rejected. So looks like markets originally were responding in a negative way because of how the bond markets were reacting. A lot of you guys know that we've been paying attention to the bond markets. Bond markets and bond yields have been going up, making it more expensive for the US to borrow money. That's not good news because that means that it's going to cost taxpayers more money because then they're going to use our capital to pay off the interest, which is currently at about $1 trillion a year in interest payments alone. So overall NASDAQ market, again, pretty much closed 0.19% in the green. From the highs, from the lows, again, the past few days have been extremely sideways. I want to share this with you so you're not surprised. I'm not here to say that markets have to pull on back. I'm just here to say that markets have had an incredible run. NASDAQ market alone has gained over 30% in the past 40 days, and now it's trading sideways. It's lacking progress on the upside. So does this mean that we're in for a nice little retracement? Every economic factor would signal yes, but markets can be irrational for much longer. And that's one thing that I also want to remind people that are eager to short. Again, myself included. You guys know that I shorted today. I wanted to keep you guys up to date. I did not trade further when it came down to my MSTR short. I made my money. I bounced. I left myself with my one lucky share. Made $2,400 shorting MSTR. NVIDIA, I didn't even post this one. I made $960. If you're part of my LPP team, they were aware that I shorted NVIDIA from the highs into the lows, but my position size was relatively a little bit on the smaller side of things. And then UNH, I also shorted UNH. I waited for it to become overbought, opened up a short, made money on the retracement, made $3,500, and left myself with my one lucky share. So overall, it was a successful day for me. I have no reason to complain. I made a little bit over $6,000 on the day between all three trades, following my day yesterday where I made $18,000. Not normal for me, right? I don't make $18,000 every single day. But one thing is certain, and especially as markets continue to consolidate, the thing that I'm trying to do every single day, and again, this is just my 2 cents, is that this is where I currently see the market. It's just my opinion. You're an adult. You can do whatever it is that you want. Markets have made a beautiful recovery. When markets were retracing, I was shorting into the retracement. When markets became oversold, I made numerous videos talking about, hey, markets are oversold. If things don't get worse, then markets can begin to recover. I'm going to start investing now. I invested for myself, for my daughter, and for my lady. I took some positions long-term, investing in Apple, QQQ, and NVIDIA, and a handful of different other stocks. Nonetheless, markets recovered much quicker and much more than what I expected. So I didn't get the full position that I wanted. But nonetheless, markets did recover. Do I plan to buy and invest more long-term right now? No. Very simple. Markets are too overbought and market conditions are too uncertain. Because of that, I think that there is pullback potential. But markets are so irrational that I don't want to short as a swing trade. I don't mind shorting intraday. As you saw that I get in, I get out, I make my money, and I bounce. I close out the trade. I don't like carrying short positions overnight when markets are still extremely uncertain about, is it going to retrace or is it just going to continue to hold or even push higher? Markets are irrational. And the reason I say this is because markets have been going up the past few weeks, not because things are getting better, but because technically things are not getting worse. There is still nothing signed. That's the part that still baffles me about all of this is there's no trade deal signed with China. There's no trade deal signed with the UK. There's no trade deal signed at all. There's just pauses, right? And this is just to buy the Trump administration time and less uncertainty, but it's still a ticking time bomb, right? especially with what's going on with the bond yields. That's a whole nother story. We've talked about that in the past before, but very simple. I'm taking things day by day, meaning that because markets are consolidating at these overbought levels, I do see there to be pullback potential, but I'm not certain that the market is going to follow that way. So I'm staying patient, I'm staying calculated, and I'm staying cash every single time we go into the close. That's not that I'm afraid to take advantage of a short position, because I'll short the life out of anything intraday. But it's too risky, in my opinion, to enter a short too early on. But markets, and then also, well, why not go long, Ricky? Markets are too overbought. Paying attention to previous highs, where we're at right now, and previous lows, it's enough of not a good deal that the risk to reward, it's just not worth it. My potential for profit does not outweigh my potential for loss. And that's the best way that I could explain it. I like to break things down so it makes sense to the people that watch my videos. So when you watch me trade live, if you end up tuning on into my live trading session, you have a full understanding of why I'm trading and what I'm trading. So again, I'm very excited to see how the market continues to progress. We have NVIDIA reporting earnings next week. And when it comes down to the series of economic reports that are set to be released tomorrow, we have building permits and new home sales. That's going to be the big one for tomorrow. New home sales month over month. Are more new homes being sold or less than what is expected? It is expected that next month, once this report comes out again, that things are bound to slow down. A lot of you guys should understand that the 10-year treasury from the US is a benchmark for mortgages, meaning that if that continues to go up, we get closer and closer to 8% mortgages. Raise your hand if you want to take out an 8% mortgage. Not many hands raised, right? Because no one wants to pay that much for a mortgage. It makes it incredibly expensive to own a home. So therefore, it's going to slow down the economy. And that is why I've been talking about the bond yield so much, is that it makes it more expensive for everyone, including the US, to borrow money. And the US needs to refinance some of its debt by the end of the year. So if things don't begin to go down, again, it becomes a ticking time bomb. Will the Federal Reserve have to step in and possibly print money out of thin air to save the US government? We'll see. And if so, then that's going to bring us back to 2020 all over again, and inflation is going to go back up through the roof. So I'll make sure that I do my part in trying to keep you guys up to date and keeping things as simple as possible. As of right now, we're taking things day by day. Markets are overbought, but they're bullish and irrational enough that we don't want to carry the shorts. But it's so overbought that we don't want to continue to add to our longs. At least I don't. So again, I'll make sure that tomorrow, depending on which way the market ends up going, we'll do our part in taking advantage of those opportunities. I hope to see you for tomorrow's live trading session. If you want to tune on in, second link in the description down below. It breaks down to as little as $1.35 per day. You don't have to join, but if you're someone that learns best by watching other people do, then I think that you'll enjoy our live trading sessions. Like always, let's make sure that we end the year on a green note. Take care, team.